Markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day, so you can be up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and that anything shared in our content should not be construed as financial advice.
5, 4, 3, 2, 1.
Where does the allocation of funds happen right now?
And it'll go exactly where you want it to go. The next bit, after that, you'll enter and then it'll go up.
How would you enter, right? What if you're new to order blocks? What if you're nervous, right? Let's say.
And the correction moves is in the A, B, C move.
Today's stream is made possible by our partners and sponsors. If you're looking for a new broker, trying to get funded, or looking for a trading community to join, consider checking out the links in the description below. By using these links, you'll get access to great products and be supporting the channel. Without further ado, the show is about to begin.
Alrighty, traders, good afternoon, good morning, good evening, and welcome to the show today. Hey, I do apologize that we didn't start at 10 o'clock this morning, but my week has just been absolutely crazy. My son got married on Saturday, so leading into Saturday, it was crazy, and then after it is crazy. I took off Monday, so I actually thought today was Tuesday and not Wednesday. So I've got my days all messed up, but you know what? We're back, we're ready to roll. Hey, hopefully everyone had a great weekend. I had a fantastic weekend. What an emotional day on Saturday as my son got married. And it's just one of those things, man, that you just cannot keep those crocodile tears in. Hey, so let's take a look and see what's going on in the market. I think it's a good place to start thinking about a reversal spot, right? Turning points in the market. And so as we go into what I like to call a gearing up, gearing down approach, it is more like trying to look at the market from a larger perspective, but then going down to the smaller time frames and start looking for those trading opportunities. So looking at the larger time frames helps us to be able to identify the bigger picture, but then going down to what we call a gear down approach is looking at the lower time frames to be able to look for execution, look for trade opportunities, right? So let's go ahead and jump into that, traders. And once again, if you have not subscribed to the A1 Trading channel, you may want to go ahead and do that. They broadcast on a regular basis. You definitely want to go ahead and check it out. So make sure you subscribe to the channel. And at the same time, smash the like button. If you need more time to do that, no problem. But smash it after that as well. So let's go ahead and take a look, see what's going on in the market. So here we go. I've got the Euro Swiss open right here, and I've got the 4-hour time frame open. Now, traders, we've spoken about this, and thank you, by the way. It says congratulations on your family in the wedding. Thank you. I do appreciate that. Thank you. So this is the thing. If we take a look at the Euro Swiss franc right here, we've been talking about the Euro Swiss franc, and we've been speaking about the Euro Swiss franc actually going back up, all the way up here to the fourth wave. Mark this down. If you like writing down numbers, you may want to go ahead and do this right now. Check out this number right here at around about 1.613. So 1.0613 is that's the number. I'm going to say it again. 1.0613. That is what we're calling our fourth wave. Listen, traders, if you look at the bigger picture right here, you'll notice that the market has done this. It's created a wave 1, wave 2. We had a wave 3 down here. Here is wave 4. And now we've got down to wave 5 right here. It went a little further than we expected, but it did go down. Now, you might be thinking, well, big dog, what about this big dip going down right here? It's all part of it, right? There's two things you can look at right here, all right? And I'm going to go ahead and zoom in a little bit closer up here. There's two things we can look at this, the way the markets move right here. We can look at this as a larger swing all the way up here from the top, and this is just a zigzag wave 2 pullback, which is normal, all right? And that means then the market's going to go ahead and chase after then the 1.618 of this larger swing. Let's go ahead and put the fibs in that. So we can take a look and see what that looks like. Here we go. And so this is, if I extend the fibs all the way up here to the top, then look at where the 1.618 is. The 1.61 is right here past this wave 4 right here. So we can expect Euro Swiss franc to actually go ahead and target that 1.0613 level and maybe even go a little bit past it. In fact, it will go past that level. So that's good to know. Now, I could also go ahead and do this. I also can go ahead and put in a fib from this low to that high and see this right here, see this as an irregular flat, right? So price goes up, down, up, then it goes ahead and takes out the low down here with that last move, and now we've got price possibly going to close out with a nice bullish engulfing candle. Traders, when this happens, this gets me excited. So already we've been talking about turning points in the market. We've talked about being patient. We understand the market turning points, understanding wave structure, and understanding patterns. And all of this stuff is happening right now. We're seeing the market confirm that we actually have a good sort of support level right here, taking out that previous low, giving us now what we call a bull rally. So what we're going to be expecting on this is we're expecting the Euro Swiss to be rallying, to be bullish all the way up until the fourth wave. Now, there will be a wave structure in place, okay? And the market's going to wave like something like this. We're going to have this as a wave 1, 2 right here. This will be 2 right here. So this will be 1 in an irregular flat pattern. Then we'll look for the market to go rally up to this level. By the way, that's going to be our next pit stop on the rally. So we'll find resistance at around about 1.0506. And to be honest with you, I wouldn't mind if the market just blows through there and then use that level as support before it goes up to the next level. But we're going to see the market create that third wave, fourth wave pullback, and then the fifth wave right here. So we're in that rally. So what we need to do is, just like I mentioned about the gear up, gear down trading approach, all right, it means that what we've got to do is we've got to look at the larger time frame, understand what the markets are doing, know where the turning points are, and then use that information to be able to execute trades on the lower time frame. So let's go ahead and do that. So as I break this down right here, I'm going to go down to the 1 hour chart right here. Now, I know that there's traders out there that use different type of trading strategies, and that's fine. Everyone has their own trading approach of how they want to approach the market, whether it is in a upward trend, downward trend. They want to use the moving averages, indicators, all that good stuff, and I understand that. So this is what we're going to do. And by the way, this is my son just called me right now. Cameron, call you back. So this is the thing right here. We've got to know that when the markets are creating these sort of patterns, we're going to know exactly how to be able to trade it. So I'm just going to go based on price action. And so as I go down to the 1 hour time frame right here, I'm not going to start off right over here. I'm not going to start working my swings and try and figure out what to do. I'm going to go right where I'm expecting the turning point to be. You see, I've already done the homework on the larger time frame. All I need to do now is find a place on the lower time frame to go ahead and start looking at my swings. So this is how we go ahead and trade intraday. We'll look at this move right here, and we start the swing setups. So I'm going to do this on the 15. I want to show you something on the 15 here. If it is going to show me, let me see here. Let's see here. All right, so this is the lowest point right here. So if I look over this right here, here's our first low high. Then we had this big, strong rally, and then price pull back. And now we're looking for the market to go ahead and create wave 1, 2, 3, 4. And so we're looking for 5. And when it completes this fifth wave, we'll have a correction. And then we'll look for the next move to go back up bullish again. So I'm going to go ahead and do this. I'm going to put in my fibs just so I can identify from this wave 1, 2 right here, 3 all the way to this right here. And now I'm looking at this and I'm saying, okay, if I understand how market cycles work and how swings work, if we stay below this level right here, we're probably going to go ahead and take out that low. So we're probably going to come back to retest 172. So we could see about maybe a 20 pip drop just to come back here. Again, if the market stays below that level, then we'll see the market turn around, go back down here, and then rally back up north. So when you trade as an intraday trader, the one thing that we always want to do as an intraday trader is you want to trade at support and resistance. In fact, if you're not even intraday, you want to trade that even if it's long term, right? But you want to look for, most traders want to look for support and resistance, and buy off support, sell off resistance. Say that again. Buy off support, sell off resistance. And so clearly where we're at right now, because we expect the market to go long-term rally, it's not a good place to go ahead and look to buy here because this could be resistance. So as an intraday trader, you would say, okay, I'm on the sideline on this one. It's not sitting the way I'd like to see it. I'd like to see price coming back down to this level. And when price comes down to this level, here is where I want to go ahead and look to go buy. So I want to buy around about 172. So it's going to be 1.0, 172. That's a good place to go ahead and enter the market. Now, I'm starting off with this and digging deeper into the analysis right now, just so you got an overall idea of exactly what I mean when I talk about gear up, gear down, and we're looking at larger time frames for directional buys and smaller time frames for execution, right? And so this is the same thing. So as I go to different currency pairs, I'll be looking at the same thing. Look at my larger time frame, establishing direction, and then going down to the smaller time frame and looking for the opportunity, okay? So let's go ahead and move on. Now, if you take a look over here, we have Euro JPY. Now, again, let's go to the larger time frame. Pop it up the daily right here. Now, if I look at the daily time frame, and I start off right down here below, take a look at the magic here. Right, here it is. What are levels that are so important to us that we need to pay attention to? Well, firstly, number one, oh, hold on a second. Yeah. Take a look at this. This is so important to look at. I can't stress to you how important this is. Check this out. Here we have, and I'm going to mark this off. Here we have an inside, all right, inside wave right here. Wave 1, 2, 3 up here, and 4 actually came down a little bit lower right here, came all the way back down here. There it is. And now we're going to 5 up here. Now I'm going to mark that off, but watch this now. I'm also going to mark off the larger wave. This is the large wave right here. Big wave 1, 1 there. 2 down here. Okay? So this inside wave 1, 2, 3, 4, and 5 is actually telling me, because of this inside structure, it's telling me my third wave is up here. Okay, so why is that important? Well, okay, so we're heading into a fourth wave, large wave. And so it's called the fourth wave correction wave, which is the larger wave. But when the market completes a 5-wave structure, what tends to happen is the market chases after the fourth wave low. It doesn't matter whether it's an inside structure or a larger structure, it doesn't matter. The fourth wave low is always going to be the target, which means if we go ahead and take a look at this right here being the fifth wave and that being the fourth wave, there's a good chance that we could see Euro JPY going all the way back down here to take out that low. So I'm going to be expecting Euro JPY to be selling off, and I'm going to look for a sell-off. In fact, this level right here, this fourth wave high, the third wave high right here, at 134.01, let's just call it 134 because we're friends. So at 134.00 is going to be a very significant level of resistance and support. Support now as the market trades above that, but below, if the market trades below, it's going to be a very important resistance level. So let's call that a significant level right here. And it is a whole number, right? 134. So that's going to be a huge psychological plus, of course, not just psychological, but of course a significant level of support and resistance. So make sure that you write that down. 134 is going to be critical. Price is trading at 135.18 right now. So we're probably going to see the Euro JPY work his way down. Now that we know that, let's go ahead and start looking for that downward swings on the lower time frame. Let's go ahead and gear this down. And so as I go ahead and gear this down right here, I start paying attention to this. Here is our first swing going down. We can see the price is still chasing after that level, which is just below that 134 level right there. So we know that as the market continues to test resistance here, we should be looking to sell at those levels right here. And so traders can use resistance and sell off resistance. Traders can go ahead and use counter trend line breaks and look for those counter trend line breaks if they want to do some intraday scalping trades. But right now, we should be thinking that the Euro JPY is heading further down south, right? So we're going to continue. Any rallies that we see in the Euro JPY right now would be an opportunity, short-term opportunity to sell it back down south and look for it to go back down to that 134 level. And if we break through 134, we're heading all the way down to that 124. I think that was the level that we spoke about. Let's take a look here. Oh, yeah, we're heading down to 124.27. Okay. But I think what's going to be really good for us, okay, is if price gets back below this 134. If price trades back below this 134 right here, right, we know that 127 is going to be the next target to the downside. Now, sure, it's going to wave. It's going to wave. We're going to have rallies and we're going to have dips and so on. But eventually, price is going to come back down to this 127 level and then eventually down to this 124 right here. Okay. So this is good for those that have been hanging on to the JPY crosses based on this rally that we've seen. This is good news for a lot of those traders. Now, let's take, and let's hear, I'm not oblivious to the fact that I know that the Bank of Japan is pushing this narrative to drive the JPY bearish. Not the inflation is low at 0.9%. They've got no intention to go ahead and increase rates or do anything regarding the rates. And of course, they are stimulating the economy. So they are constantly buying, they're doing bond buying. They are driving us absolutely nuts because the market's driving all the way bullish without any sort of correction move. I think we do now. I think the market's starting to adjust everything and things are starting to readjust. Okay. So, now, Macy, so this means that the yen is going to be strong. Yes, this means we're going to get some strength in the yen. Now, remember, you're trading with two different currencies. So you got to make sure that you're checking out both currencies. But yes, we're going to get some strength coming back into the yen. And then you'll probably start seeing a turnaround also with like the US dollar. US dollar's also been selling off. We're going to get a little bit of strength from the US dollar as well. So US dollar CAD, we should see some nice rally. In fact, let's take a look at the US dollar CAD. Here is US dollar CAD right here is the daily time frame. And the same thing. Actually, look at there. We've already seen a nice little wick. Look at this daily right here. Look how the daily closed out. Little beautiful little tweezers sitting over here at the bottom right here. I won't call it tweezer bottoms right here, but we've got a nice little in doji sitting over here. Actually, it looks like a beautiful little doji right here. And price is trying to break out of this channel. So we break out of this channel, we got a target to the upside at 125.94. So we're expecting US dollar CAD to rally all the way up here. So we're getting some strong yen, we're getting some strong dollar, and all of this has been weak over this period. So you can see how weak the dollar's been, and now we're looking for a correction move. And if you actually look at the wave structure right here, we had wave 1, 2, 3, 4, but then the market came back above here. Now we're probably going to be looking for a deeper fourth wave high. That's why I say that 125.93 level is a target to the upside on US dollar CAD. Finally starting to see the signs of this happening. Okay. Finally seeing the signs of this happening. Let's go ahead and take a look at, now we've got a trade right here says, Mary says, Aussie JPY is looking really tasty. Well, that's if you want to eat it, but okay. Let's take a look at the Aussie JPY right here. Right here, my friends. Let's see. Same thing. We're getting the 1.6 rate. Correction is due. So Aussie JPY, look for a correction move on Aussie JPY. We're going to positively take out the 90.84. So just that alone, we're looking at about a 250 pip drop at the minimum, a 250 drop on the Aussie JPY. So yes, looking very tasty. Now we've got another trader asking about the New Zealand US dollar. Let's take a look at the New Zealand US dollar right here. Strength out of the US. What's going to happen? New Zealand US dollar is going to sell off. We've actually been looking for the New Zealand and Aussie, both the commodity pairs, to actually sell off. Now with a bit of strength in the US, pushing the dollar up, going to push New Zealand US dollar bearish. Beautiful setup. Look at that beautiful doji, not doji, but this is actually a spinning top right here. Actually, it's a good pin bar right here. We can see it right here at the top, testing this downward channel line right here, hitting a bit of resistance here. Now it's possibly chasing. We should see this continue to sell off. All right, continue to sell off. So let's go ahead and clean up house. So we should see a continuation of this. And actually looking at the wave structure on this, we're targeting this level right here. So New Zealand, US dollar, we're heading down to 0.6324. 6324. So that's about a 600 point. I'm telling you right now, if you look across the board right now on the JPY crosses, New Zealand, Aussie crosses, US dollar crosses, across the board, there is movements, potential pip movements of between 500 to 700 pips in just this corrective move. I'm going to call this a corrective phase throughout the currency pairs right now. So every currency pair that I'm seeing so far that I've gone and reviewed, 600 or at least 500 to 700 pip opportunities are available. You just got to find the gear down approach, right? Get into that gear down. Look at the gear up, get directional buys, understand what the market turning points are, then move it down and scale it down to a lower time frame. We call it a gear down. Go down to the lower time frame and start looking for those swings. Okay. Now, if I go to the smaller time frame on this, here we go. Look at that. We can do this. All the way down here, first swing. So, and traders, you've got to look at this as it is, right? So many people don't. But you got to look at it this way. This is important right here. All right? We've got to trade below there, because if it doesn't trade below this level right here, this is a 15-minute time frame. But if it doesn't trade below there and stay below there, then there's a likelihood of the market doing this, where it trades below, comes back up, and goes back up higher, and then goes back down south. And so a lot of traders believe that this could be another rally, believe that the market's going to continue its rally. But the honest truth of that is, no, it isn't. It's just a correction move. It's just the way the patterns are moving inside the lower time frame. All right? Again, understand patterns, understand market direction, understand your wave structure. All right. So we're looking for this to continue to move down south. Now, there's a trader right here talking about the euro US dollar. How's the euro? What are we expecting from the euro US dollar? Well, let's go again and take a look at the larger time frame on euro US dollar right here. Oh, you know what's interesting? We know we've had a sell-off on euro, right? Euro's had a sell-off, obviously, since the beginning of the war with the on Ukraine, the war in Ukraine. I don't know if I should say the war in Ukraine or the war on Russia. I guess it's Russia and Ukraine war. Well, the war that's taking place right now, we've seen actually a lot of downside move in euro. And the reason why we've seen some downside movement in euro, obviously because euro is very dependent on oil out of Russia. And so with all of this going on, there's been a lot of downside move in the euro pair itself. And if you take a look over here, I mean, this started all the way up here around about May this year. Am I joking? Yeah, I'm joking. May last year. It started about May last year and it started downside move, but we've just recently had this big downside move from here. This was around about February this year. So around about February this year, the market dropped back down. But I want you to pay attention to something right here. Right? Take a look here. I'm going to go ahead and clean up the charts. I'm going to draw it up here so you can see it. This is what it looks like. Wave 1, 2, 3, 4, and 5. Traders, we've just hit a fifth wave. So we just spoke about the US dollar gaining strength, which means that the euro US dollar should be selling off. But also mentioned earlier on, I mentioned that we've got two currencies. And so we got the US dollar and we got the euro. I think that we're going to get some strength back in the euro. And even though we got a stronger dollar, we might end up seeing the euro getting stronger just because of my pattern, just because of the wave structure that I'm seeing right here. And so I don't see any alternative right here other than this. Maybe this could be an inside wave 1, 2, 3 right here, 4, and then 5 right here. And if that's an internal structure, then this will be a large wave 1, large wave 2, then a large wave 3 only here. That means the euro might want to go down further before it goes ahead and starts its pullback. Now, that would be my alternative. What I've already looked at right here is I've said that if we seen this as an inside fifth wave, then remember I mentioned that the market always looks to go back to the fourth wave high. So I'm still going to say that we're going to see the euro working its way back up. So that's why I believe that we're going to get some strength out of the euro itself, because we are going to head into some stronger dollar. But I also believe that the euro is going to get stronger too. And so again, remember the safe haven currency pairs, JPY, Swiss franc, euro, US dollar. We might get across the board, all right, some strength out of all of those, okay? Although I'm seeing weakness out of Swiss, I'm thinking we're going to get a lot more strength coming back, because we've seen actually during this period, we've seen a shift of safe haven towards the Swiss franc itself. So I'm thinking here, I'm just thinking out loud, that we're going to see some weakness out of the Swiss, strength out of the euro, strength out of the JPY, and strength out of the US dollar. So three pairs are going to get some strength that have been weak over this period: euro, US dollar, and JPY. So as we look at the different currency pairs, that's what I'm going to go ahead and speculate on. So here we go. So you can see right here, I've got my wave 1, 2, 3, 4, and 5. So I'm already looking for price to go back up. So as I'm looking at the 4-hour right here, the daily right here, I'm seeing already a bit of indecision right here on the daily. And if I go to the 4-hour time frame, here's the 4-hour. And the 4 hours are already giving us a turning point right here. So this means that I'm going to suspect possibly the rally to continue. Now, we could just also be just range bound. Take a look right here. At least in the midterm. So we could be just range bound right here, and the market's just going to go back up to the top of range right here, and then continue to work its way back down or break through that range. So looking at the support that we're at right now with a bullish candlestick formation, I'm going to suspect that the euro US dollar is going to continue to rally. All right. And that, again, I believe we're going to get some strength out of the euro. All right. Now, I don't know what the news is and what's coming up with the news. I know we had some cash rate this week for the Aussies. Cash rate, they kept their rates unchanged at 0.1%. So there was no change to their rate decision. But of course, we saw a big, strong rally in the Aussie dollar. We don't know if the next news announcement on the rate decision in the Eurozone is going to be keeping the rates unchanged and start driving the price of euro back up again. We'll have to wait and see how that plays out. All right, so let's take a look and see right here. Sorry about the camera. It gives me 30 minutes and then it's got this like hot off switch. So we'll continue to monitor the euro movement and look for price to go up. Now, last currency pair before we close off today. Pound Swiss, because I know I started off late. Pound Swiss. Pound Swiss, go to the daily time frame of the Pound Swiss. Take a look right here. Wave 1, 2, we added support of wave 1. We had a wave 3, we had a wave 4 pullback. Pound Swiss is heading north, my friends. We've got a bullish, look at that. We've got a beautiful bullish flag right here. We're looking for the market to go back up here to the top, break through the flag, and go back up to this level right here. Price is at 134. Let's go to 135 because we're friends. So Pound Swiss, I think we hit bottom. We hit a good support level, a strong support level right here at the wave 1. We're actually looking, if you look over here, we got this wedge. Let me go to the monthly. Take a look right here. We had this like falling wedge forming right here, and a break of that will get the market back up again. So I think pound Swiss franc is going to be a rally. So again, maybe this is a euro and a pound rally time. Maybe pound and euro rally time, and we're going to start seeing the Swiss losing ground. That's going to motivate this and escalate this rally on the pound Swiss franc. So I'm going to go ahead and say that we're looking for pound rally on this. And I know I need to go to one more chart, and that is gold. I know everyone's looking at gold right now. Let's take a look at gold. I think it's time. We spoke over here. We said the buyer zone. It's going to be anywhere between 1817 and 1890. Price has really dropped here around about, look at that, 1890 right there. That's actually the support level. So we're actually right at that support. We should be thinking bullish on gold. Gold's going to be gold's next move. It's going to be targeting right here at 2161. So we had a pullback, marked in a little bit of a range. That's a good support level right here. We're looking for gold to go up to 2161. So if you have not already bought in or you add onto your positions, we're at a good solid support level right now for buyers. And we're looking for gold to go up to about 2161 based on the wave structure. Now, notice that I haven't gone into the details of this chart just because I've already gone ahead and established the foundation of establishing gear up, looking at the larger time frame. Once you establish the larger time frame, the next thing we want to do is we want to gear down and move down to the low time frame and look for that opportunity. Now, when you go down to the lower time frame, remember, traders, there's different ways to trade the market. Whatever fits your comfort zone, whatever fits your style of trading, use that to go ahead and execute your trades, but always know the turning points of the market. Always know what the larger time frames are telling you so that you can make good trading decisions. Traders, I hope you enjoyed the session today. If you have, go ahead and do us a favor and smash the like button. Share this video on YouTube, or at least on your social media. Get it out there. We'd love to get more people into the trading sessions. Love you guys. Have a great week of trading. Have a great weekend. And I'll see you guys next week. This is FX Big Dog signing off.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker, trying to get funded, or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.